So you can qualify for up to $500,000 worth of insurance
with no
without
medical exam. Oh, that's pretty cool.
And after that, you need a medical exam.
With that company. So what a lot of the times what we'll do is we'll stack companies.
Yeah.
Bro, I've been in insurance for a long time. I probably got 8 life insurance policies. I probably paid $30,000 a year strictly on life insurance because I understand that I'm just buying money.
Right.
My kids got life insurance. My wife got life insurance. I got life insurance. Everybody got it. You know what I'm saying? Because we're buying money.
What's going on, everybody? I'm Dan the Realtor. Today, discover the safeguarding power of mortgage protection insurance. We explore its essentials, clear up common myths, and navigate policy acquisition. Learn how it benefits you as a current or future homeowner, cost factors, customization options, and its future in the industry, ensuring your home security and your family's peace of mind. Welcome to the Real Estate Wire, folks. What's going on, everybody? I'm Dan the Realtor.
And I'm Nick Bush, the Realtor.
And today we got a special guest. We got Mike Lee.
Yes, sir.
Who?
We in the building, baby.
Mike Lee.
Mike Lee.
What's up, bro?
Hey, man, living this dream, bro.
So tell us a little bit about your business, bro. You're in mortgage protection and life insurance.
Yeah, bro. So I've been in the finance space for about 8 years. I kind of stumbled into it. I was somebody who was making decent money, but I didn't know how money worked. So I ended up running into a young cat, cat that was 1 year older than me. He was making twice as much money and keeping his money. So I'm like, let me try to figure out what you're doing. I'm trying to get like you when I grow up. And I jumped into it, found out how money actually works. I learned about the insurance industry. I learned about mortgage protection. And it's been good ever since, bro. I do a lot of traveling right now, really educating people on how mortgage protection actually works, how finance actually works. I do focus on some demographics that don't get the information as readily as other demographics. But yeah, man, I love what I do, and I'm here for the long haul.
Yeah. I think one of the biggest focuses, I know for me and my business, probably you and your business too, Nick, we're super hyper focused on getting people into houses, right? And we're kind of singularly minded when it comes to that. And I think one of the biggest next steps, especially like our clients, future homeowners, current homeowners, and inevitably will need to take, but probably don't think about enough, which is how to actually protect your asset in the event you get sick or in the event you pass away, how to make sure that your family's lifestyle isn't disrupted too much in the event something happens and you need to use either life insurance or mortgage protection.
Yeah, man. It's such an essential part of the home buying process that people disregard. And I completely understand because a lot of realtors, you guys do an incredible job of going out, building the relationship, finding the clientele, the kids' names, everything about these clients. They're now family to you and you're definitely family to them. But what happens after closing? About 30 to 60 days later, that client, that family member that you now have, they start getting letters in the mail that talks about mortgage protection, and everybody assumes that mortgage insurance and mortgage protection is the same thing. Mortgage insurance protects the lenders, right? It protects those guys. It don't protect you. It makes sure if you default on your loan or you can't pay it, they ain't got to pay it. That's why it falls off after 20%. Mortgage protection actually protects the homeowner. Right? So if I pass away, my income passes away. That's a significant hit on my family's lifestyle. That becomes a burden when my family is trying to pay these bills because they don't stop coming. They don't cut in half just because you cut in half, but the family dynamic cuts in half.
Right.
You know what I'm saying? So mortgage protection is built to make sure that, God forbid, one of those family members pass away, husband, wife, whoever it is, that the house can be paid off for the family. Or a portion of the house. Yeah. Some people, they're older, they can't afford to cover the entire mortgage. And to be frank with you, they have no desire to live in that house if their spouse dies.
Yeah.
The walls are talking, it reminds me of John, all those things. But what some people will do is say, let me get 12 months of the mortgage. Let me get 24 months of the mortgage so I can make sure that if something does happen to me, I got an escape plan. I don't have to leave the funeral and start making major decisions right away.
Okay, so can you elaborate on that a little bit? Because when I talk to financial advisors, financial planners, they emphasize getting life insurance for that same reason, right? If your husband dies, then you can't, and they made $100,000, then you need $10 million of life insurance or $1 million of life insurance. So then you're covered for like 10 years, right? But you kind of just mentioned that mortgage protection does the same thing. So what does mortgage protection do exactly? And how does it work? Break it down.
So mortgage protection is simply life insurance, but it's incredible marketing.
Okay.
Right? So let's say somebody buys a house, it's $500,000. They got a 30-year loan. Mortgage protection is $500,000 worth of coverage, and it's a 30-year term policy. You know what I'm saying? It ain't as sexy as people make it out to be. It's literally life insurance, but it's putting a name on the life insurance. It's giving the life insurance a reason. So if somebody has life insurance and says, hey, I want to put some of this money towards the mortgage, it's the exact same thing. However, most buyers, homeowners, they're not taking that piece into consideration when they actually buy the home.
Yeah.
So the financial advisors are completely right. Yes, you need to get life insurance and allot some of this money to things, but the timing, right? If I buy my house, I want to protect that home as well. I want to protect that investment. So yeah, you're right on target.
Okay. So I want to go do a deep dive into that. Also wanted to figure out some of the financial implications of having like life insurance, the different types of insurance that you're talking about, and then kind of do a deep dive into the different types and then the terms. Do you recommend universal? Do you recommend term? Do you recommend whole life? And then kind of what's the difference in between all that? So I guess we can start from the top. You did make a distinction between mortgage insurance and life insurance. So why the distinction?
Well, because people don't want to talk about life insurance, but they will much rather talk about protecting their home. Like, you got to understand how morbid the conversation gets when all you talk about is death. Hey, what are you going to do when you die? What is it going to look like? Like, the thing that we do is we make sure that people can have that conversation one time. Like, bruh, we ain't trying to revisit this every other weekend. Like, let's get it knocked out, So it's really just clever marketing. If I told you, hey, you bought a house, do you want some life insurance? The answer is no, typically, because you don't see the correlation. But if I talk to you and I say, hey, bro, you just bought this house, you want to protect that home? If you pass away, bro, your income passes away. Your family's going to be stuck like Chuck, Now it's like, you know what? This does actually make sense. So it's really just marketing.
So how does mortgage protection insurance differ from traditional life insurance and then also private mortgage insurance? What are the difference between all three of those?
Yep. So a traditional life insurance policy, just think about life events, life happenings, right? Life, family, things like that. That's what life insurance is for, life events, right? And that's the marketing for it. You want to make sure that if you pass away, the funeral and burial is taken care of. We use an acronym in the insurance industry. We use an acronym called DIMES, DIMES. These are the reasons why people buy life insurance. D is for death, costs $15,000 to $20,000 to die nowadays. I is for income replacement. If I pass away, my income passes away. That's a hit. That's a significant hit. The M is for mortgage protection. So it has its own category when we talk about life insurance, meaning, look, this house, we want it to be ours. We don't want it to go back to the bank like it traditionally does in a lot of our communities when someone passes. The E is endowments. So we're talking about children, making sure the kids got some money set to the side. Maybe it's a charity that you're passionate about. And then the S is savings and retirement. There's a lot of people. I'm an entrepreneur. I don't have somebody that's going to meet me halfway on a 401k, match me. No, my guy, I got to get to the bag. However, a lot of people are putting their money into a 401k or TSP or traditional IRA for us, entrepreneur, Roth IRA. But that money is still risky. There's a lot of people who wanted to retire in 2009 who couldn't retire because of 2008.
Yeah.
Imagine having $1 million in your retirement package and you lose 40% of it. Now that's $600,000 and you still haven't been taxed yet. So now when you look at, all right, if I do retire, what does it look like? Oh no, that $400,000 is now, or that $600,000 is now $400,000. And if you have $1 million in your retirement package, you probably have $100,000 lifestyle.
Yeah.
So something has to give,
Mm-hmm.
right? But with the S and dimes, the savings and retirement, we put it in programs like we did for your son,
Mm-hmm.
where you get the gains of the market. So when the market goes up, your money goes up. But when the market goes down, your money stays the same. When it comes to losing money, zero is your hero. You know, because people don't take in consideration, if I have $100,000 and I lose 50%, if the market goes down 50%, that means I have $50,000. If the very next year the market goes up 50%, people would assume I'm back to $100,000. No, bro, you ain't getting credit for what you had, bro. You got $50,000. 50% of $50,000 is $25,000. So now you got $75,000. As an entrepreneur, I can't afford that hit.
Yeah.
You know what I'm saying? So those are the reasons why people get life insurance. But the M is specifically for mortgage protection, because we want to make sure that these new homeowners, and y'all got new homeowners popping up all the time. We want to make sure that they're protecting that investment.
So what's the vehicle that you can put your money in that it only goes up or it goes back down to zero? Like, what's that vehicle?
It's called an indexed universal life insurance policy.
Okay.
The reason it's indexed is because it's not putting the money in the market. It's just using the market as an index or a reference. Okay. Life insurance companies, all of their money is in reserves, meaning if every single person died at the exact same time, they have enough money to pay every single death claim and enough money to restart another life insurance company. They're required to have that. Like, life insurance companies, they're the ones that buys street signs. Back in the day, they were the ones that bought bricks to build universities. Like, they buy things that ain't going nowhere because all their money has to be in reserves. Keep it a buck. Life insurance companies are the ones that bailed us out of the Great Depression. The banks were broke.
Yeah.
They didn't have any money. You know what I'm saying?
Right.
JCPenney, we all know JCPenney.
Yeah.
Life insurance companies are the ones that helped JCPenney get through the Great Depression. The Rockefellers, life insurance companies are the one that help pass their money on to the next generation.
Yeah.
You know what I'm saying? But it's not common in our communities. Ain't nobody really talking about this stuff.
Yeah. So why do you feel like lenders aren't, like, so who's your B2B partner, right? Because logically, during the process of home buying, right, it feels like it would make sense for a lender to say, hey, look, you're buying a house, 30 years, whatever. I have Mike Lee here. He's a mortgage. His company, helps you protect your mortgage, right? It seems like the logical, point in the transaction. So why do you think that that's not happening? Like, what's the void?
Lack of understanding.
Yeah.
And you got to have people to slow down long enough to get to understand it. You know what I'm saying? Like, just like anything, everybody is flipping through the next thing. And that's how people operate when it comes to conversations. People tap out, yeah. And they don't see that this is going to actually bring in more revenue. It's actually going to bring you more referrals because you took it from front to back.
Yeah.
You know what I'm saying? So that's the disconnect. I personally try to connect with a lot of real estate agents because you guys are the ones that build that relationship.
You have the influence over the clients.
You can tell the clients, hey, listen, we're gonna go out here and look at this. You already know, your budget. Put another $200 in your budget per month to make sure that not only do you have the house, but it stays yours even after you're not here. So if we can get real estate agents to have that conversation with the people that they've already built this relationship with, now we on to something. You know what I'm saying? Like, I have clients who have passed away and paid off their house. Unfortunately, I got well over 10 death claims. You know what I'm saying?
Yeah.
And I see what happens with this, but again, it's a unique conversation, and what they say nowadays, you got to have a hook.
Yeah.
we ain't got the hooks to, get all the lenders on or the real estate agents.
So one more question. I know you guys, but like, does it, you mentioned something before, like, it was like you get 12 months of protection or 24 months of protection. So are you paying for a certain length of mortgage protection?
Yep. So typically when we're talking to people about mortgage protection, a term policy, you're going to have, let's just say it's $300,000 worth of coverage for an example. You have the option of getting it for 15 years, 20 years, 25 years, or 30 years. Okay. What some people do is they will get a 15-year policy because they're saying, look, I plan on paying this joint off in the next 15. I plan on paying it off in the next 7. You know what I'm saying? So let me get this 15-year policy. So if anything happens over this next 15 years, the house is paid off for the family, you know, and the price is going to go accordingly. But what ends up happening is people just don't get the information. Like, this is a logical sale. This is a logical decision.
Because everybody's going to die.
Everybody going to get up out of here at some point.
One day.
You know what I'm saying?
And you don't know when it's going to happen.
And nobody knows when.
If we knew when it was, then look, I'll just buy a life insurance policy the day before I'm about to be out this joint. You know what I'm saying? Hold on, what is today?
Right.
The 24th?
I got 20 more minutes.
Go ahead and, you know what I'm saying? Grab this joint real quick. Make sure my family's straight. You know?
I did that with my driver's license, renewed it the day before. Because I knew it was expiring tomorrow. I was like, let me run out to the DMV real quick, re-up my license. So I don't
That's
get arrested.
exactly right.
In DC, you know, they arrest you if you got a suspended license. They take you to jail.
I didn't even know that.
Yeah, bro. So let's get granular, bro. Let's get really nitty gritty.
Let's go.
Let's get like really deep in the weeds.
How you get granular and deep in the weeds at the same time?
That's the same. You know what granular means?
Yeah.
So yeah, we about to get granular and deep into the weeds.
Like when I heard it, I was like, "That's kind of."
I'm switching my metaphors. I'm like adding a couple in there. So for people who want to like, subscribe, and share, make sure to follow us on YouTube and hit that notifications button so you're the first to know when we drop new content. All right, so I like everything that you're talking about, Mike. I like the idea of protecting my mortgage. I like the idea that if it goes down in these streets, my family's taken care of. So now what? What is the next like step in order to get started?
So honestly, it's just meeting with a professional. You know what I'm saying? Like, what I want everybody to do is connect with your real estate agent. Don't try to connect with me. Connect with your agent. They can connect with me. And the reason I say that is because this is their project. We're an extension of them. You know, we have no desire to come on and say, all right, well, give me all your clients. No, bro. I'm representing you. I'm an extension of your service. You know, so for a lot of people, the next step is literally just contacting your agent, saying, hey, can you get in contact with Mike? You know, just because we keep everything above board. We keep everything above board.
So what's the customization like as far as like individual policies, and what also can affect eligibility and how much you can actually take out a life insurance policy for?
Yep. So the customization is every policy is completely different. Okay. The three things that we take in consideration is age, health, and budget. The insurance companies care about your age and your health. I care about your budget because I'm not going to sell you something that you can't afford. It doesn't help me or help you for you to pay for it for 6 months, 12 months, and then cancel it.
Yeah.
Because when I call you and I do our annual review, hey, checking in, bro, how's everything? Now you got to explain to me that you don't have any mortgage protection. You ain't got nothing to make sure your family's good. Now we got to go through this whole thing again.
Right,
you know what I'm
right.
saying? And now it's not like it's long and drawn out, but it's like, bruh, let's find something that works, and you can always scale up. You know, some of the things that will knock people out, you know, if they had cancer over the last, like recently, you know, it's an underwriting grid. So if somebody's over the age of 50, it don't matter if they had cancer 3 years ago, they can still get insurance.
Yeah.
First day coverage. You know what I'm saying? Under the age of 50, they're going to expect you to be a little bit more healthy. You know, some of the common things that people don't realize that they can get a mortgage protection or life insurance policy and have is diabetes. It runs rampant in our communities. But everybody is like, oh, I got the sugar.
I got that sugar.
I got that sugar.
Right.
You know what I'm saying? So I can't get it. Bruh, like fall back, let a professional.
Yeah.
You know what I'm saying? It's just like the same person who tells you I don't have a good enough credit score. I don't know what I can. Let's
get you there.
Let me do my job.
Right.
You know what I'm saying? So it's the exact same thing. But those are the biggest things, bro. Age, health, and budget. That's all that really matters.
You guys do like blood tests, physicals?
We do no physicals. Why? A lot of companies will. The reason we don't do it is because if somebody is coming and taking a blood test, they're test driving the car before they buy it.
They who?
The insurance company.
Right.
Isn't that advantageous for them though?
It's very advantageous for them. But it ain't advantageous for the person.
Yeah.
Because if you come back and you had too many hot dogs, now you got high blood pressure, or now you got
a detox for the week before you go in there.
Exactly. What they're doing is they're looking for something. If they find something, then they have every right to say, nah, I'm good on this car.
Okay.
We're going to go into the next car.
Yeah.
You know what I'm saying? And what ends up happening also is whenever somebody gets that physical exam, those results goes on their permanent record. It's called the MIB, Medical Information Bureau.
Mhm.
So now any life insurance policy that they apply for in the future, they got this information.
Right.
So especially when we're dealing with our community, bro, I'm like, nah, we're not going to get a medical exam.
Mhm.
We're going to get you we're going to get you going in without a medical exam. And if you want to come back for some reason and get a medical exam after you've been approved, we could do that.
Mhm.
You know what I'm saying? We could do that. You know, but no medical exam.
So then now, if you, are there like, does that affect like how much you can qualify for? Like if you don't do a medical exam and you got like
So you can qualify for up to $500,000 worth of insurance
with no
without
medical
exam.
oh, that's pretty cool.
And then after that, you need a medical exam.
With that company. So what a lot of the times what we would do is we'll stack companies.
Yeah.
Mhm.
I've been in insurance for a long time. I probably got 8 life insurance policies.
Mhm.
I probably pay $30,000 a year strictly on life insurance because
Yeah.
I understand that I'm just buying money.
Right.
My kids got life insurance. My wife got life insurance. I got life insurance. Everybody got
Right,
it. You know
right,
what I'm saying?
right,
Because
right.
we're buying
Yeah.
money. You know what I'm saying? So at the end of the day, it's like what a lot of people they say, how much can I afford? And my thought process is, how much can you save? Because if I told you, if you put X amount of money into this pot and it's going to output Y amount of money, which is going to be significantly higher than what you put in, but the caveat is you don't receive the money, your family does,
Right.
would you do it?
Right.
For a lot of us, the answer is
Yeah.
Yeah, of
this
course.
is what I'm doing it for.
That's what you're doing it
This
for,
is
right?
what I'm doing it for.
Yeah.
You know, but a lot of people, they put their money into a 401k with the hopes of getting a little bit more money at the end of the day. I'm like, bro, this is an automatic this is for your family. You know what I'm saying? So it's really just trying to meet people where they are, help them. Y'all, you know, y'all in sales, y'all get it. You got to explain it to them in a way that is tangible.
Yeah.
You know, so.
Do you think the overall customer like wants? So do you think that because you were like, hey, don't reach out to me, reach out to your realtor, and you think that that's because the client, the customer is going to tune you out more so than the real estate agent or the lender?
Well, the relationship has already been built.
Yeah.
You know what I'm saying? And I want to be able to say, hey, who was it who told you to talk to me? It was Nick.
Yeah.
You know what I'm saying? That means more to me because I get to say, hey, bro, let me, you know what I'm saying, grease your palms a little bit.
Yeah.
And that keeps
Well,
the flow
only our broker can pay us.
Okay. Well, yeah,
Yeah.
That's the Association of Realtors.
Only the broker.
So yeah.
But I'll take some gin, you know what I mean?
We don't take
I'll find a way.
kickbacks.
Yeah, like, can I get some equity in the company? It sounds like it's growing, man.
We'll find a way.
Yeah.
We'll find a way. But all in all, it's like you guys have already established a relationship, and I want to make sure that y'all understand that I'm not here to try to take your client. I'm not going to take them down the street. I'm not going to introduce him to nobody else. It's like, bro, go back to your realtor.
Yeah.
That's your guy. You know what I'm saying? And I'm his guy. You know what I'm saying? Like, so I try to keep everything extremely clean. Or if I find out that somebody is just coming to me, they got mortgage protection, I always try to connect with the realtor and say, hey, look, bro, just so you know, your client, Suzanne and John, they just got a mortgage protection policy. You know, I wanted to just reach out to you, let you know. If you got anybody else, whatever it is, but I'm always trying to connect back to you guys.
You know, it's funny. I know someone that used to sell mortgage protection, and now he lives in San Diego, where you came from. You know what I mean?
Oh, for real?
Yeah, he just moved out there, you know, but
As he should.
random coincidence.
Yeah.
So, how do you see the future of mortgage protection and life insurance evolving over the next 10, 15, 20 years to more meet the needs of modern homeowners?
So what has to happen for mortgage protection to evolve? Because right now, I mean, it's been in existence forever. And if my realtors don't know all the details about it, then the clients don't know all the details about it. It's easy to assume mortgage insurance is the exact same thing as mortgage protection. Mortgage insurance is to protect protect the company, right?
Bank, yeah.
So what needs to happen is we need more real estate agents to educate their clients. Who wants to talk to me? I'm the random guy who's trying to sell you something. Your realtor is the guy who's taking you to 26 different houses. He explained, look, right there, you see that? That's water damage right there. You know what I'm saying? We ain't gonna put no. They did all of that for you, bro. You know what I'm saying? So what we need to do as a industry is really just make sure our realtors are completely informed. But this is something that is built for your clients. You know, it's not a service, it's not an add-on. Yeah. I don't want people to think that this is an add-on. No, bro, this is required. The only reason your auto insurance company requires you to have auto insurance is because they're on the hook.
Yeah.
When it comes to your home, they're not on the hook. That's why they got mortgage insurance.
Mm-hmm.
They're fine with you defaulting on your
That
loan.
makes sense.
They're completely fine with it.
Right.
But we're not fine with it, right? As the professionals that's helping you get to where you want to be.
Yeah.
And inevitably, I don't know if it has happened to you guys already, but inevitably, you're going to have clients that's going to pass away.
Yep.
And they haven't paid off their mortgage.
Yeah.
And somebody in that family is like, what the hell am I going to do now?
Especially for you, because you do a lot of probate.
Yeah, that's usually when I see them at the end of it, when they need to sell. They didn't have life insurance. They didn't have trust. They didn't have anything in trust or anything. Didn't have advancement, so they end up in probate.
That's exactly right. It happens every day.
Yeah.
You know, but the answer, you know, the ticket is in front of us, but you also got a thousand other distractions.
Yeah.
I'm not clicking on I'm not clicking on the mortgage protection ad that pops up. It don't resonate. I have to hear from somebody that I already trust. I got to hear from my realtor, you know, somebody that already knows how this thing actually works.
Yeah. Good. All right. Well, where can they find you?
You can find me through Dan. You can find me through Nick. If you want to follow me, you can follow me on Instagram. Who's Mike Lee? Sure. But I'm serious about go through your realtor.
No, I'm trying to plug you for this.
I'm trying to plug you for this. Go through your realtor.
He's like, I'm Who's Mike Lee on Instagram, but like, follow Dan and Nick.
You know what I'm saying? Like, don't reach out to me and say I'm Dan's client, because I'm going to go back to Dan. Don't reach out to me and say I'm Nick's client, because I'm going to go back to Nick.
Yeah.
I want that relationship that you already have established to continue, right? Granted, they sold you the house. It might have been 6 months, 12 months, 2 years ago. That's still your realtor.
Okay, so that's one last question I have, right? If I've been in my house for 5 years, can I still go back and get mortgage protection?
100%.
Okay, so it's not something you have to do up front. You can do it at any time.
You can do it at any time. You can get a 25-year mortgage protection policy if you want to. However much time, you know what I'm saying? Or what I tell people, I just talked to somebody not too long ago. They got 20 years left on their mortgage, but they also have a 2-year-old. So I'm like, okay, let's go ahead and get you mortgage protection. You know what I'm saying? We're going to get you 20 years worth of mortgage protection, but let's actually throw in another 5 years. You know what I'm saying? So just in case something happens, you're straight. But also if something happens, your kids are straight until age 27.
Yeah.
Right.
Like this whole thing that kids grow up at 18, that's a myth.
Right. Yeah.
People ain't grown at 18 nowadays.
Terrible virus that hit the black community.
You
You got to get out the house when you're
gotta get out.
Yeah.
Terrible virus.
You got to get out.
That,
Bro,
Yeah.
if I could have stayed an extra couple years after college and just stack some dough, can
Me
you
too,
imagine
bro.
where we would be?
Me too.
You know what I'm saying?
Yep.
Can you imagine where we
I
would
really
be?
didn't have to move out. I just did it because I wanted to be cool.
My mom started kicking me out the house like 14, 15. So
That's what I'm
No,
saying.
that's because you were a delinquent though, bro.
no.
This nigga was from the hood, bro. You had to get out.
No.
You was causing trouble, bro.
Yeah,
I was a
be like
good
that.
kid. I was like a normal, good kid. You know what I'm saying? I would go to school, wouldn't cause no
Get good
trouble.
grades, all
I
that.
was-
I got good grades, perfect attendance.
I got an
yeah.
award at graduation, the Citizenship Award.
Oh, that's solid.
Yeah, it means I'm a good person. I'm
Yeah,
a positive
yeah.
influence. I'm a leader.
We all got
You
that
know what I
one.
mean? My
Everybody
peers voted for me. You know what I mean?
They sent all of us the same award. You wasn't.
I got to go up on stage and everything.
I know we all
My mom
did.
was like, "Did you know you were gonna get that award?" I was like, "Nope." She's like, "You look confused." I was like, "Because I was."
That's the award they give you to give you like some positive reinforcement.
To
where
make
you-
sure I make it out here in the world. They're like,
Give you some
we think he
encouragement.
can make it if we get some.
He got a shot.
Yeah, he got a shot.
This
Hey,
is one of
man.
them.
And now I'm here, bro. You know?
Yeah, I guess it worked. Citizenship Award.
I need to give a citizenship award to some of my clients.
Yeah, thank you, Citizenship Awards.
Shots
This
to
podcast was brought to you by Citizenship Awards. Where can they find you at, Nick Bush?
Find me at Nick Bush the Realtor on Instagram. And then I have my own podcast also. It's called Real Estate Explained. We drop every Friday. So subscribe on Apple Podcasts, Spotify, Google Play, wherever you listen to the podcast.
Definitely check out Real Estate Explained podcast. Leave a 5-star review for Real Estate Explained. And also check us out on YouTube, the Real Estate Wire podcast. Make sure to like, subscribe, and share. And also, if you're listening on iTunes, make sure to leave a comment below and leave us a 5-star review as well. For all of us here at the Real Estate Wire podcast, thank you so much for jumping on. We are out.
Solid.
Solid.
Solid.